Hey everyone, welcome back to Corporate Decoder, the place where we make sense of corporate filings. And today we are diving into a report from Lucid Diagnostics. And after this video, you will be just as lucid. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss complex financials and investment decisions. Lucid Diagnostics just had their annual meeting and they filed a report that discloses this. What does that mean for you? It gives us a peek into who's running the show and what big decisions they made and what are the implications of this annual meeting for the company's future. Keep watching to find out. Right off the bat, on June 18, 2025, Lucid Diagnostics had their yearly meeting with the stockholders. About 71% of shares were represented, which is a pretty good turnout. At the meeting, they did two important things. At first, they picked the board of directors. Second, they approved some key proposals, big decisions, which we will talk about them. First thing they needed to do was vote for directors. Think of this like voting for class president, but for a company. The stockholders voted for their leader. It's important to know who is on the board of directors because these people make the big decisions for the company. The board is divided into three groups, like different teams. Each team has 2 or 3 directors, and they each have a multi-year term. Lucid nominated Stanley Lapidus and Dr. Jock Sokolov. The stockholders voted to re-elect them to the Class A team. What does this mean? It likely means people are happy with the direction of the company or that they trust these two leaders to keep making good calls. Let's look at the numbers. Stanley Lapidus got about 63.8 million votes in favour, while about 6.7 million votes were withheld and there was 19.9 million broker non-votes. Jock Sokolov got about 63.8 million votes in favour and about 6.7 million were withheld again and also 19.9 million broker non-votes. What does this mean? The 4 votes are a vote about 63.8 million votes in favour and about 6.7 million were withheld again and also 19.9 million broker non-votes. What does this mean? The 4 votes are a vote of confidence. Authority withheld means people didn't necessarily disagree but weren't fully on board either. Broker non-votes usually happen when brokers don't get instructions from their clients on how to vote, so they don't vote. The second thing on the table in the meeting was a really important proposal, which was about issuing more stock through something called convertible notes. Basically, the company sold these notes to investors in November. These notes can be converted into shares of stock. They needed the stockholders to approve this because it could affect the price of the existing stock. The votes for this proposal were about 69.6 million for, 620,749 against, and 302,867 abstained, with the same 19.9 million broker non-votes. What does this mean? It means stockholders approve the company issuing more stock. This can be both good and bad. Good because it brings money for the company to operate, to grow, to get bigger, and bad because it can dilute the value of existing shares. Everyone owning shares now owns a smaller piece of the pie. If you want to dive deeper, the SEC filing mentions a proxy statement filed in April, which has even more details. Finally, one of the final acts of this annual meeting was to confirm that CBIZ CPS PC as their accounting firm for the year ending in December of 2025. Think of this like hiring someone to do your taxes. Companies need independent accountants to make sure their financial statements are correct and trustworthy. Stockholders overwhelmingly approved this decision. About 90 million votes were for it, 2,504 votes against it, and 222,270 abstained. What does this mean? This is standard procedure, and the high 4 vote shows that people trust the company's choice of accountants. It's usually a good sign when stockholders and management agree on these things. Now, looking at these actions more broadly, everything looks fairly normal. Re-electing existing board members indicates continuity. Approving stock issuance empowers further cost of some dilution. Selecting accountants is necessary so financials remain credible. Overall, Lucid Diagnostics seems to be keeping things steady. Electing the old board shows stability, while being able to issue shares means they can get funding, but maybe at a cost. Picking a trusted accounting firm is just another sign their fundamentals are good and have trustworthy financials. Keep in mind though, this report is just a snapshot. It doesn't show the whole picture of their business. Some interesting details to keep an eye on would be their upcoming earning reports, any new tech developments, and whether they are truly profitable. Alright, that's our breakdown of Lucid Diagnostics' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Remember, investing is a game of research and continuous learning. And of course, never invest what you can't afford to lose. Thanks for watching. See you next time.